Hi, this is CA Pragnesh Kanabar, Senior Audit Faculty at CA Final and CA Interlevel. I'm in the 10th year of my coaching, and you will be very happy to know that I've taught thousands of students when it comes to their CA Final and CA Interlevel. So, just 10 to 15 seconds about myself, and then we'll go ahead. My students have scored All India first in audit subject at CA Final and CA Interlevel. I have documented feedbacks, you can ask for that. Then, many of my students, lots and lots of students have excelled by scoring exemptions and stuff at their exams. And I have also helped students in converting their 25 into 55 and 60s and stuff. So I have seen all the phases of a student. I have seen all types of students. I have seen how do they struggle and what exactly do they want in audit subject. Now, let us be very frank. When it comes to audit paper, I know that you are worried about, oh my God, this is a theory subject. Oh my God, what am I going to do now? Correct. I like accounts, I like FR, I like SFM. But when it comes to audit, I'm not very clear about my approach. Let me tell you, there is no shortcut to success. When it comes to audit subject, we need to go through the books of the ICI. We need to go through the lectures. We need to write and write and write and write a lot of stuff. And that's when you develop expertise over this subject. I can give you hundreds of results, not just one or two, hundreds of results, where students have scored exemption in audit subject in group 1, and in the other subjects they have scored in 50s, 40s, and they have cleared group 1 based upon the exemption that they scored in audit subject. I can give you results where students have scored 70 plus, and in all other subjects they are at 50, 55, somewhere over there. So they have made and they have proven that audit subject can act as a weapon and as a trump card in clearing your exams. Now, we are expecting changes in the syllabus from November 23 attempt onwards. So in the new syllabus, again audit subject will presume a lot of importance because of its weightage, because it being one of the main subjects which institute wants to keep in the syllabus, and it is proper that they should keep it in the syllabus. And that is the reason that you should stay focused on clearing this particular subject. And that is the reason that you are looking at this particular video. Now, I am very happy to say that I am associated with Pinnacle Education, because the way in which they help students in their CA journey, it is a wonderful way, and I really like the culture. So, with the combination of my lectures and the support from Pinnacle Education with their scheduling and their test series and their learning management systems and stuff, I can say it for sure that you are in for a wonderful journey. Yes. Now, if I talk about the syllabus when it comes to audit subject, okay. So your syllabus broadly gets divided into 3 parts. One is standards on auditing, and that is one of my USP when it comes to audit subject. Standards on auditing, if you talk about the new syllabus that they are going to bring from November 23 attempt onwards, all right, then they are going to make applicable all the standards, not only the standards which you have studied at inter-C level, but also the additional standards which have been issued by Auditing and Assurance Standard Board. So there will be around 46 standards that you have to study. And trust me, we will do it in great details. I know you'll be worried about the last day revision and summary and stuff. Don't worry, I have answers to everything. But we'll be doing the lectures in great details. We will be going through the auditing pronouncements over there. The second part of the syllabus is professional ethics, which is based upon Chartered Accountants Act 1949. If you just see a peer news which was circulated in December 2022, I think it was there on the public platform. ICAI, suspended, terminated around 11 chartered accountants. One of them was the auditor of Amrapali Real Estate Company. Now, ICAI takes this decision based upon which act and which code of, based upon which document. That is nothing but professional ethics, the code of ethics that a chartered accountant should follow based upon CA Act 1949, and that is of around 16 marks. So your standards have a weightage of around 40 marks. Then professional ethics has a weightage of around 16 marks. And then I say that let us talk about the balance chapter. So I said that it gets divided into 3 parts. One is standards, second one is professional ethics, and third one is the balance number of chapters. All right. The balance number of chapters are divided further into 2: audit of various entities, all right, and some special aspects in auditing. like audit of banks, audit of NBFC, audit of public sector undertaking. Then they will talk about some special assignments like investigation, due diligence, forensic audit. So we have these combination of these chapters. And that is how there are around 15 topics that you need to be worried about when it comes to the new syllabus, which will be made applicable from November 23, or for sure at least from the May 24, November 24 cycle. And we are completely ready for it. Whether you talk about the study material, whether you talk about the question bank, whether you talk about the MCQs, I am going to cover every single aspect. I need to also tell you that when it comes to revision part, all right, because in lectures we do detailed discussion and stuff, but when it comes to the revision part, so do not worry about it. I have my revision videos, my revision notes, which will help you, on the day of exams also, and even for that last revision. Then what about the sir? What about study planner? In our last 4 or 5 months, I will take care of these things also. In fact, I keep on issuing these things to the students even on public platforms. All right. So then how they can plan their studies, what they can do. Sir, what kind of questions can be expected? What will be the weightage? How to write the answers? How we can practice. All of this is a part of my lecturing. Don't worry about it. Sir, last 1.5 day strategy, sir. Last 1.5 day strategy, sir. Do you really think that I would have reached this level if I would have if I had ignored these things? No. The very fact that I've survived for these many years in the industry, and attempt by attempt we create so many people with so many students with exemption, with all India toppers in audit subject, it is because of my hard work and the combination of the students' efforts. All right, so don't worry about it. All such FAQs, frequently asked questions, and the frequently asked concerns, frequently raised concerns, I will address it, and I've already addressed it for so many years. All right, so don't worry about it. And I need to prove it to you with one simple concept. There is one cutout from the lectures that I'm going to put it up over here after this particular introduction is done, and I need to show it to you. That one single phrase that you have studied at your inter-C level, that phrase, applicable financial reporting framework. Yeah, that phrase had a lot of meaning, and it was there in your inter-CA module also. Today you will understand the meaning of that phrase in great details, and you will straight away see how I'm going to connect it with practical life. That is also one of the aspect in my lectures, that I keep on randomly opening. I keep on randomly, opening the Reliance audit report or Tata audit report. We keep on doing that. All right, and that helps you in understanding the practical aspect. And with this concept that you will see, which will just start now after this particular introduction is over, you will realize that how we are going to discuss in audit lectures. All right. So over to the cutout of the video in which I've taken the lectures. Thank you so much. Now look at the very first concept. Come on, man. You will recollect few things from inter-C level. This line you would have used n number of times. Applicable financial reporting framework. So concept number one. My God, students write this line whenever they are not able to guess anything else. They use this phrase. Applicable financial reporting framework. So this line, this phrase will be used so many times in audit subject. And let me tell you, do not be overconfident, because for sure today you will learn something new about this. Applicable financial reporting framework. What is the meaning of applicable financial reporting framework? Framework means guideline. Financial reporting means financial statements. Applicable means applicable. So guideline based upon which an entity has to prepare financial statements. Tell me the AFRF. Tell me the applicable financial reporting framework in case of listed companies. Tell me the AFRF of listed companies. Are, can I say they have to prepare their financial statements as per Schedule 3? Plus they have to comply with Ind AS also, yes or no, sir? Yes, sir. So Schedule 3 of Companies Act plus Ind AS becomes the AFRF of listed companies. If I talk about banks, then they have a separate format under Banking Regulation Act, Banking Act 1949. Sorry. And they have to follow Ind AS also. I mean, of course, there are some issues with respect to applicability of Ind AS in case of banks, as per RBI has deferred for some years and stuff, but that's okay. But they will have to eventually follow with that. Then in case of insurance companies, they have a separate format given under IRDA regulations. So come on, man. Come on. At final C level, you know the word applicable financial reporting framework means the guidelines based upon which entity has to prepare their financial statements. That's okay. This much you are aware of. But still, I did not take an assumption. But I want to discuss something more. Applicable financial reporting framework. You know what? Whenever you are accepting any audit of financial statements, you have to first analyze that which type of financial statements they are. There are two types of financial statements: general purpose financial statements and special purpose financial statements. What do you understand by general purpose financial statements? Are the normal company final accounts that you see, balance sheet, P&L, is it being prepared for some one or two users? No. The balance sheet, P&L of companies that you see, the company final accounts, it is being prepared for all users. All right. That is why it is GPFS, general purpose financial statements. That means your final accounts, financial statements prepared to serve common information needs of all users of financial statements. When I say general purpose financial statements, means financial statements prepared to serve common information needs of all users. That means your company final accounts. But are you aware about this, that there is a concept of special purpose financial statements also? What is special purpose financial statements? Students, let us say that X Limited is preparing financial statements as per the bank's format to get a loan. So they have applied for a loan of 300 crores. X Limited has applied for a loan of 300 crores. And bank has asked them to prepare their financial statements in a different format, just for the bank to have a proper view of their financials. So bank has asked them to prepare a different set of financial statements. So only then their loan can get sanctioned. So X Limited is preparing one set of financial statements as per Schedule 3. This is for all users, and then it is preparing a special set for the bank. Now this special set is being prepared only for the bank and not for all users. That is why this is special purpose financial statements. So how do I write it in audit English? How do I write it in audit English? That these financial statements are prepared to serve specific information needs of the intended users of financial statements. Come on. Currently it is sounding easy. I'm going to teach something difficult, but for that I'm creating a base. Financial statements, special purpose financial statements means financial statements which are prepared to serve some specific information needs of the intended users of financial statements. Am I clear with this? Yes. Many of you wouldn't have heard about special purpose financial statements because normally in inter C accounts and final C accounts, you are so busy in preparing company final accounts that you have never understood that there is a separate set of thing also that is going on in the market, that is SPFS. Because company final accounts are prepared for all users in general. And in your FR paper, in your FR paper, as well as in your audit paper, whatever you are discussing is nothing but general purpose financial statements. Now I want you to understand one thing. Audit of general purpose financial statements. Sorry. GPFS. Okay. This is discussed in essay 200 to essay 700 series. That is why I told you out of 38 essays, you have only 35. Because you don't have essay 800 series in your syllabus. Essay 800 deals with audit of special purpose financial statements. Just that you should be aware about this. That the statutory audit that we do, that is as per essay 200 to 700 series. And the whole essay 200 to 700 series tells you that how to audit a general purpose financial statement. But when a separate set of financial statement is being prepared for some specific users, how to audit that, that is discussed in essay 800. I want a confirmation. Are you done with this? So whenever you are accepting any audit, you have to check that for which financial statements you are getting appointed. Whether it is for general purpose financial statements, statutory audit are normally for GPFS, or whether it is voluntarily, sometimes they appoint you for SPFS also, special purpose financial statements. Done, done, done. Okay. Wait, the real concept is still remaining. You know what? Tell me something. Now, this is practical discussion for students who are already done, who have seen some audit, they need to participate. Tell me, as per I am the management, you are the auditor of a corporate company. So I am the management of a private limited company. And as per Schedule 3 and accounting standards, I have prepared my financial statements. Still, there are some 5 points on which you want me to give notes to accounts. Can you ask me to include additional notes in the financials? Can you ask the management to include additional notes? Yes. Yes, sir. Anshika, have you done that? Have you asked management, I mean your team, whether they've asked management to include additional notes?
Yes, sir. My manager, they review the financials, so they tell them
And what if
include.
management, and I don't know whether you were a part of this discussion or not, but what if
Yes,
management
sir.
says that, okay, very good. So what if management says that, see, we have given all the disclosures which are mandatorily required as per Schedule 3 and accounting standards. Why are you asking us to give additional disclosures? We don't
That
want to provide
happens.
this.
That happens.
Then what is your counter argument?
It is required for
To achieve
additional
fair
disclosure.
presentation, correct? It is required
Yeah,
to achieve fair
additional
presentation.
disclosure and better
Better
presentation.
presentation so that readers can understand the financial statements in
Yes,
a better manner.
yes, yes.
What gives you the right to argue that with the client? Don't you feel ashamed that when they say that we have given all the notes as per Schedule 3 and accounting standards, you are still forcing them that you include these additional notes? What gives you that right to argue with them? Come on, this is the last difficult question that I'm asking. You have almost reached. If you answer this, I will order a Swiggy for you. Yes. What gives you the right to argue with them?
So,
Yes. Anshika, you know, in Schedule 3, if you download Schedule 3 today from MCA's website, you will see that they have clearly written in Schedule 3 that the disclosures in Schedule 3 are minimum disclosures. Based upon materiality, additional disclosures can be given. So Schedule 3 is not restricting you that you have to provide only these notes. Schedule 3 says that minimum please provide this much. Additional can be given based upon materiality. That line is there in Schedule 3. Secondly, in accounting standards, do we have a concept of materiality?
yes.
So even that, because it is one of the fundamental concepts. So even that says that boss, management has the responsibility to provide additional disclosures. That gives you the right to argue with them. Understood this? All right. You know what, Anshika? If you are conducting audit of a cooperative society, you may not even have that right to argue with them. You know, especially state-based cooperative societies. I'm not talking about central cooperative societies. Cooperative societies which are registered in various states. Let us, for example, take Maharashtra state cooperative society rules. You know, the cooperative societies which are registered in Maharashtra, they have to simply prepare the financial statements as per the format which is given by the registrar. There is no responsibility on them to provide any additional disclosure. And you can't even argue with them that, okay, please provide these additional disclosures and stuff, because it is nowhere written anywhere. Understood this? So it becomes very difficult for us to convince the management of a cooperative society to include additional disclosures. But in case of companies and stuff, though, you can say it with your right. That boss, look at this Schedule 3 and AS. It is clearly written that these are minimum disclosures and additional disclosures need to be given. And now there is a very big concept behind these practical discussions. Thank you so much for the participation. There is a very big concept behind these practical discussions. Everyone now listen to me very carefully. The general purpose financial statements that are prepared, the final accounts, they are prepared based upon two different frameworks, two different guidelines. One is called as fair presentation framework. Companies Act, Schedule 3, accounting standards. There, the requirement is not just that, oh, management just provide these disclosures. No. Additionally, right has been given to achieve fair presentation of the financial statements. So, in a fair presentation framework, management needs to provide the disclosures which are prescribed in the framework. After this concept, I will leave the lecture, but everyone focus. Management needs to provide the disclosures which are prescribed in the framework. That much needs to be done. Plus, it is a framework which focuses on fair presentation also, not just on the minimum disclosures that need to be given. Plus, there is a responsibility on management to provide additional disclosures beyond the disclosures required by the framework. I'll give you the time to write, but please ensure that everyone is focused over here. There is a responsibility on management to provide additional disclosures beyond the disclosures required by the framework, which is written in Schedule 3, which is written in accounting standards. Okay. Achha, let me create one more situation. Tell me, everyone, do you remember at least little bit of your AS4 events occurring after balance sheet date? We consider the events occurring after the balance sheet date up to the date of signing by the management, date of approval of the financial statements by the management. There is, of course, Ind AS 10 also for this. Okay. Now tell me something. Management has called a board meeting today and they are going to sign the financial statements. And they have signed the financial statements. Next day, you come across an adjusting event. That means there was a legal case going on 31st March. But the outcome has come on the next day after management has signed the financial statements. The financial statements have not yet been issued to the shareholders. They are in the company. Will you ask management to again call a board meeting and sign the financials? Because it is practically possible to do it. Because it is not yet issued to third party. See, once the financial statements are issued to third party, it is not possible practically to go for revisions. But tell me, if you come across an event, after the signing done by the management, but you think it is an adjusting event, will you ask management to incorporate that amendment in the financial statements? Yes or no, sir? Yes or no, sir? Yes or no, sir? Everyone needs to reply to this. Whatever comes to your mind, that's okay. Even if you go wrong, that's okay. Okay, some students are saying yes, some students are saying no. But can I say it is something that is judgmental? The call will be taken by you and the management. Yes or no, sir? Yes, sir. And can I say, if you are asking management to sign the financials again and include that adjustment, that means you and the management, you are doing something different from what is given in the accounting standards. Yes or no, sir? Yes, sir. But is your intention wrong? No. Your intention is that the financial statement should achieve more better presentation. Understood this? These things happen in corporate audits. that you do something different than what is given in the standards, accounting standards, in order to achieve better presentation. There are so many areas in accounting standards, like provisions, contingent liability, like impairment, valuation areas, like this events occurring after balance sheet. There's so many things that they depend upon judgment, and management may do something different than what is given in the standards, not to cheat the users, but to lead to a better presentation, Such kind of frameworks are fair presentation framework. So there is one more point which you normally observe in fair presentation framework, that departures are allowed from the requirements of the framework if it leads to better presentation. My conceptual explanation of fair presentation framework is done. Now I will give you a formula based technical explanation. So how will you understand whether a framework is a fair presentation framework? First of all, it should have some minimum disclosures. Like Schedule 3 accounting standards, they have some minimum disclosures, that at least this much needs to be disclosed. Plus, either A or B. It should have either A or B, or both of them to grade. Means there has to be a responsibility on management to provide additional disclosures beyond the disclosures which are required by the framework. Or there has to be some kind of provision where management is allowed to follow their own judgment so that it leads to better presentation of the financial statements. Why do you think these things are allowed in Schedule 3 and accounting standards? Why do you think these things are allowed in Schedule 3 and accounting standards? So that the corporates can achieve better presentation of the financial statements. That is why Schedule 3 and accounting standard is not a rigid framework. It's not just one harsh framework. It is a fair presentation framework, a framework which focuses on compliance, plus it allows some flexibility so that fair presentation can be achieved. I want a confirmation. Is everyone through with this word fair presentation framework? Wait, the suspense is yet to open. Now, why I'm teaching this? It will just open it in few. I'll just open it in few minutes. Okay. In cooperative societies, I told you, whatever format is given, management is just expected to follow that. Beyond that, no further effort has been taken to achieve fair presentation. Such kind of frameworks are called as compliance framework, where management needs to comply with the requirements of the framework. That's it. These things, these requirements are absent in a compliance framework. You go to a state-based cooperative societies registered in Maharashtra, registered in Gujarat. You ask them that please provide these extra notes to accounts so that it can lead to better presentation. They will change the presentation of your face. So they will just say, whatever is given in by the registrar that we have done it. Why are you getting behind us now? Right? So management needs to just comply with the requirements of the framework, and there is no other effort taken by the framework to achieve fair presentation. So we can write examples also. Schedule 3 plus accounting standards or Ind AS. This is a fine example of what a fair presentation framework should be. And compliance framework is state-based cooperative societies, because many of the states, they have their own cooperative societies act. All right, everyone. Now I'm going to open up the suspense that why am I teaching this? You know what? You will be shocked to hear this. In audit report, no need to write this particular point. In audit report, we express our opinion, correct? opinion on the financial statements. And mostly at inter-CA level, what normally professors teach is that students, whenever we are expressing an opinion on the financial statements, we are supposed to make the use of the words true and fair view. Can I say everyone is aware about this point? Yes or no, sir? Everyone needs to confirm that we are supposed to use the words true and fair view. Now, let me tell you something. If the financial statements are prepared as per fair presentation framework, normally in India, most of the entities are using fair presentation framework. That means management has been given the responsibility to achieve fair presentation. In such reports, we can argue with the management. Management, please provide this extra 5 notes. And if they have provided those notes, then we can use the word that the financial statements are presented fairly. Or we can use the word true and fair view. But you know what? Shocking expose of today's lecture. When financial statements are prepared as per compliance framework, we are not allowed to use the words presented fairly, or they are showing a true and fair view. We are not allowed to use these words. Unless the law wants us to use it, standard says do not use such words when financial statements are prepared as per compliance framework. Tell me something better. Tell me something better. That when a cooperative society management has not taken any efforts to achieve fair presentation, they just prepared the financial statements as per what was the applicable law. That's it. Then how can I use the words true and fair view when fair presentation was never achieved by them? I asked them to give 5 extra notes. They said, no, bro, I'm not going to do it because as per the registrar of cooperative society, it is not required. So I cannot say that they have not followed the law. But at the same point of time, I cannot use the word true and fair view. Remove this from your mind that whenever auditor is writing an opinion, always he has to use the word true and fair view. No. Maybe you are hearing this for the last time in your life. Because normally in practical life, you will get audits of corporate entities. Corporate entities may always be used the word true and fair view. Understood this? Because their financial statements are prepared as per fair presentation framework. But that's not the law. That's not the standard. Standard says, please check the financial statements which you are auditing, whether they are prepared as per fair presentation framework or compliance framework. Only if they have been prepared as per fair presentation framework, means apart from the disclosures which are required, management has taken more efforts to achieve fair presentation, then you use the word true and fair view, otherwise not. I want a confirmation. Is everyone clear with this concept of fair presentation framework and compliance framework? Each one needs to confirm over here. It's a very important concept, will have a very big effect on your audit discussions. Yes, that is why I cannot start with any standard, because from the first standard itself, they'll be using these words. Okay. So everyone, please write down this. I'm just going to dictate now when the lecture gets over. So if the people who have written it can leave, and people who want to write it can write, and people who have doubts can sit with me. Right? But I'll just take one doubt. I think there's a raised hand. Yes, Vipra.
So just to clarify, if another act is applicable, for example, Insurance Act is applicable, and the management is following that framework,
Wait. They are following insurance framework. They'll have to follow
IRDA
that.
framework.
IRDA
Yeah.
framework. So
And
they are
then,
preparing. Wait. They are preparing financial statements as per IRDA Act, correct?
yes.
Acha, they are also following accounting standards, correct?
Yes.
And even in IRDA Act, the disclosures are minimum disclosures. They have said that additional disclosures need to be given as per the information that is required to the users. So even
Yeah.
IRDA Act, Banking Act, when you download their accounts, you will realize that those frameworks are fair presentation framework. Normally banking, insurance, electricity, and all other companies which are registered under Companies Act, All of them are preparing the financial statements as per fair presentation framework, because schedule 3 accounting standards Ind AS, or let us say insurance format, banking format, the formats are flexible. That means whatever are the minimum disclosures that need to be given, plus there is always a responsibility on the management to provide additional disclosures beyond what is required by the framework, or the departures are allowed if it leads to better presentation. All right. Yes,
So,
Vipra, now you can go ahead with your doubt.
so if I'm taking example of an insurance company, then I'll take in consideration fair presentation framework because it is applicable to that and that will be taken ahead.
Yes, because see, it's like whenever I'll give you a flow chart, whenever you're accepting any audit, you have to analyze that their financial statements are being prepared as per which framework. Now, how do you understand whether a framework is a fair presentation framework or compliance framework? Based upon the definition which I've given over here. If there is an additional responsibility on the management to provide additional disclosures, or if management is allowed to depart in order to achieve better presentation, then such framework is not just a compliance framework, it's a fair presentation framework. That means we need to follow that framework, plus management is taking efforts to achieve better presentation. All right.
So it is basis the act what it says, then only I can determine
Yes,
whether it
somewhere
is.
it has to be written in either in the format or in the accounting standards that there is a responsibility on the management to provide additional disclosures, or the departure should be allowed if it leads to better presentation.
Okay, sir.
Because I told you in schedule 3, is it written that schedule 3 disclosures are minimum disclosures? Yes. Then in accounting standards also, do we first, what is the first accounting standard and what is the first concept that professor teaches you? Materiality.
Yes, sir.
So it is recognized in the accounting standards, Ind AS and the final accounts format that there has to be some additional disclosures. That is why the corporate bodies in this country, the whatever financial statements they are preparing, they are as per fair presentation framework. And that is why in their audit reports, we use the word freely, true and fair view. Correct. But technically, as per standards, you have to first analyze that whether it is a fair presentation framework or compliance framework. Because if you see small cooperative societies and stuff, they are not following fair presentation framework. They are just preparing financial statements as per the format. That's it. No other additional effort is taken for fair presentation because it is not specified in the requirement only. All right.
Okay, sir. Yes, sir.
Okay. Every batch takes time to understand this concept because you are so used to this word, no, true and fair view, and then someone tells you that this word is not to be used every time, so it comes as a shocker. All right, Aisha, I hope that things have been summarized also as you asked. Okay, so we will now just write the notes, that's it.